Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, owner Brent Rasmussen. And today, hopefully we'll keep this as short as possible, but this one deals with a lot of legalities. And today we're talking about buying a house with your partner. And this specific video we're going to chat about is if two individuals are not married, because that changes a lot due to federal and then also local state laws and rules. So many times people don't watch this video before they go through the process of purchasing a home, and they call us afterwards, usually in stress and struggles, in arguments, and uncertain of what they have gotten themselves into. And first, I will tell you, a lot of this video is about legalities, IRS codes, lending codes. So before you get involved in purchasing a home with someone that's not your spouse, definitely contact your attorney, your CPA, and any other professional, real estate mortgage professional like us that can help guide you correctly to make sure you thought about some of the issues that could arise if the relationship does not work. Because we know the statistics. We help a lot of clients that go through divorce. And the statistics state that 50% of marriages fail. I would assume that that number carries over, at least at a minimum, to partnerships or individuals that are living together. Obviously, 50% of them work out, but we're assuming that here in this video today. So first and foremost is it is a partnership, meaning that you both have equal liability, sharing that responsibility, financial and legal. So I know sometimes when people purchase a home together, it might state, I did this, he did this, she did this, and there's different answers along the way, but everybody is held to the same standards. So again, the first things that we want to look at is kind of the basics of all mortgage loans, looking at all individuals' credit, all individuals' income, all individuals' assets, and what your budget is, and looking at it fairly, because many times afterwards, what I see is that maybe one of the parties put more money into the transaction than the other, or one party makes significantly more income than the other, or one party has lower credit score than the other. And sometimes that's a struggle. Sometimes financials discussions can be arguments, and that's one of the main reasons people do break up, is over financial reasons. So taking a look at your partner's assessment of their finances to make sure you're in agreement to merging those accounts together. You don't have to merge all of your investments, all your assets, all of everything together, but if you're going to go apply for a loan together, they're going to look at all scenarios of that particular transaction to make sure you qualify. If one person doesn't have adequate credit, it might not work out in both of their names. So if you're using both of your incomes, we have to use both of your credits. So we need to make sure in both couples understanding each other to be okay with being open with the financing moving forward. If you are purchasing a home with your partner, the rules still apply. There's no different loans. There's no harder loans. There's no challenge. Everything is still wide open, just like you would be married. We're just going to look at all of the situation together to make sure it works itself out. But where it can come up a little bit differently is throughout the pre-approval process. Sometimes we might state, let's look at doing the loan just in one person's name because you get better interest rates, better mortgage insurance, better loan. Or we might need to have both of you on the loan because we need the income to qualify, or we need all the down payment money from both of you to qualify. So when it comes to a partnership, a lot of times when spouses come in, everybody's already jointed everything together. But when you're buying a house with your partner and you're not married yet, sometimes you're still handling your finances separately. So that's something that we want to discuss, is which way is the best loan scenario for you in qualifying for a mortgage. And then discussing what options that you really want to do. Because again, everyone that's on a loan is going to be ultimately responsible for that loan. So let's just state both parties are on the loan and one person loses their job and refuses to make payments. Both parties are going to be responsible for that loan, regardless of who did what. And that's something that you want to consider moving forward before purchasing a home together. The biggest one, obviously, is legal ramifications after the loan is done, and there's possible issues of breaking up, an individual passing away, individual becoming disabled, losing their job, having bad credit, all those scenarios. And that's generally where we see the problems, is when one party might not be honoring the other party's non-verbal agreement. And at the end of it, that's usually the struggle happens, that one party might want to keep the house, but they don't have enough income, credit, assets to be able to keep that property. And then what has to happen is the property is being sold. But the biggest issue comes out to titling the house is if one of the parties pass away, there's different ownership on how you title the property, whether it's joint tenants, joint tenancy, joint tenants with survivorship. There's lots of different types of titling, and each time you set that as title, different things happen. Some might go to the other person, the ownership of the property. Some of the ownership might go to your heirs, and that's why you want to consult with an attorney to make sure your estate and your assets are passed on the way that you want them passed on, versus having a conversation. Unfortunately, the law doesn't always care about what happens orally. They care about what is in writing and what the lender can possibly do with foreclosure, with selling of the property if someone passes away, things of that agreement. But you can also work after closing to get some kind of document placed in place, such as a legal agreement, that if we were to break up, this is what's going to happen. As long as you have those conversations and put something in writing, that alleviates a lot of stress. And I can say not many want to have that conversation of what are we going to do when we break up while you're dating. It just does not happen. A lot of times when it comes to making your mortgage payments, individuals might put together a joint bank account. What happens if the person pulls money out of that account accidentally or intentionally, and now you're unable to make the mortgage payment? These are scenarios that we see. So all I can tell you in this video is be leery, be prepared, but be educated. Just like you are listening to this video, contact the professionals such as mortgage specialists, such as an attorney that does estate planning, maybe your CPA does accounting, to get all of your ducks in a row before you sign on the dotted line, agreeing to obligate yourself legally, liably, and your assets wise together on that property. Because again, if someone becomes injured or severely injured and dies on your property, now it's a lawsuit against both of you, and you might not even have done anything wrong, but your partner might have. And that's where the responsibility truly comes. What I can share with you is after closing, having a conversation together and making sure you continually work on your finances together to move forward. So in summary, is the mortgage that much more different? No. Our process is the same buying a house with your partner than it would be a husband and wife as a scenario. But do most people forget about the legalities and the things that could come up after closing? 100%. They call and we have those conversations and explain to them these things that can occur, and trying to keep them into their property, in their house, so that they're able to do what they want to do. And many times they might have to refinance to get a party's name off and give the other party money, or the other party put down a bigger down payment and wants their money back. So these are the things that you just want to have an education and talk about before you align yourself with the other person when it comes to real estate. Thanks for checking us out. We'd love to have you subscribe here at the bottom and check out other videos that we put together to get the right answers and the correct education out there. We really believe at Mortgage Specialists, education is key. We're not here to sell you a bag of goods, be salesmen. We're here to give you the facts. And that's why we created Mortgage Matters in Minutes. We wanted to give you the answers short and sweet so that you can digest them if they apply to you. Have a great rest of your week. We'll see you here next time. Thanks. Mortgage Specialists. Driven, trusted, reliable.